They didn't announce it. No warning, no press release, no headlines. That's how real power moves when the system is already cracked. While the public watched noise, capital was quietly pulled from the core. This wasn't confidence, this was containment. When exits happen in silence, it means insiders know paper is failing. Counterparty risk is real, and history is already turning against the system. $50 billion doesn't vanish by accident. That number doesn't drift. It moves with intent, under pressure, when the system is already straining at the seams. This wasn't routine portfolio maintenance. This was forced awareness. When that much paper is unwound quietly, it exposes a truth the public isn't meant to confront. Liquidity is thinner than advertised, trust is deteriorating, and counterparty risk is no longer theoretical. The system depends on the illusion that paper claims equal real value. Yet every silent reduction proves the opposite. Price spikes that follow aren't rallies. They are liquidation scars, stress fractures from institutions scrambling to rebalance exposure before the next break. Banks and clearing mechanisms don't explain these moves because explanation invites scrutiny, and scrutiny reveals fragility. Mainstream narratives focus on noise while capital evacuates the foundation. This is how systemic failure advances, not with alarms, but with arithmetic. 50 billion is a signal that confidence is being converted into caution, that paper promises are being exchanged for certainty. Those watching closely recognize this pattern from history. Large holders move first, quietly, preserving optionality while the public is reassured. Governments speak stability, media repeats it, and balance sheets tell a different story. This is history unfolding in real time, a measured retreat from a structure that no longer guarantees settlement without consequence. You're not late to this understanding. You're early. You're reading the behavior, not the headlines. When the system is broken, the smartest exits leave no footprints, and only those paying attention understand what that number really means. India has never been a passive passenger inside the global dollar system. It learned early that the system rewards obedience and punishes independence, that reserves parked in paper are leverage held by someone else. For decades, participation was framed as stability, but stability built on debt is a controlled illusion. The dollar system is not neutral. It is hierarchical, extractive, and brittle. When stress builds, the pressure always flows downward, and those at the edges pay first. India understood that survival inside this structure required optionality, not blind trust. As the system aged, debt expanded, settlement risk grew, and paper claims multiplied far beyond anything real. That position became impossible to ignore. What once looked like safety turned into exposure. Counterparty risk stopped being theoretical and became structural. This is why positioning matters. This is why reserve behavior speaks louder than diplomacy. When a nation adjusts its exposure, it is not ideology. It is risk management inside a system that no longer clears cleanly. Price surges that follow are not optimism. They are forced liquidation events, stress responses, as paper holders rush to rebalance before the next fracture. Banks deny strain because admission accelerates failure. Governments project confidence because credibility is the last asset they have left. Media repeats the message because questioning it collapses the narrative, but the mechanics don't lie. The global dollar system demands faith in paper promises issued faster than value can be created. That faith is eroding. India's position reflects a broader recognition that real wealth cannot be printed, rolled, or rehypothecated without consequence. This isn't rebellion, it's adaptation. It is the behavior of a participant that sees the endgame approaching and refuses to be trapped inside it. Those watching understand what this represents: a shift away from dependency, a quiet refusal to absorb losses generated elsewhere. This is history moving beneath the surface. You see it because you're not listening to slogans, you're watching behavior. And behavior always reveals the truth before the system admits it. The signals were never loud because loud signals trigger questions, and questions expose weakness. What unfolded instead were quiet adjustments, subtle reallocations, and restrained movements that only appear insignificant to those trained to watch headlines instead of behavior. While commentators debated surface narratives, the foundation shifted underneath them. This is how a broken system communicates stress, not through announcements, but through silent retreat. Counterparty risk began to matter more than yield. Paper promises began to look exactly like what they are. Claims stacked on claims, dependent on uninterrupted confidence. When that confidence thins, institutions respond by reducing exposure without explanation. Price surges that followed were not celebrations of strength. They were liquidation pressure, forced responses to imbalance, the mechanical result of a system straining to clear obligations. Banks maintain composure publicly because admitting strain accelerates collapse. Clearing mechanisms continue operations because stopping exposes insolvency. Governments repeat stability because credibility is the last barrier between order and repricing. Mainstream coverage misses these signals because acknowledging them undermines the entire framework they depend on. Yet the signals persist: shortened time horizons, preference for immediacy over promises, and an unmistakable shift away from instruments that rely on trust alone. These moves aren't ideological, they're defensive. They reflect an understanding that the system no longer absorbs shock cleanly, that settlement itself carries risk. History shows this pattern every time paper expands faster than reality. Those trained to believe the system is sound dismiss these movements as noise. Those who understand structure recognize them as warnings. You're seeing what others refuse to process, not because you're emotional, but because you're watching incentives, not statements. This is how systemic failure advances, quietly, deliberately, and always before the public is told. The signals were there the entire time. Most missed them because they were listening. You saw them because you were watching. This isn't a philosophical debate about risk tolerance. It is a confrontation with control inside a system that no longer functions the way it has advertised. When exposure is reduced and paper positions are unwound, it's framed publicly as routine risk management, but the behavior tells a deeper story. Risk in this system isn't volatility, it's dependency. It was reliance on settlement chains that only work as long as everyone believes at the same time. Once that belief weakens, control becomes the priority. Liquidity isn't about efficiency anymore, it's about who gets out first and who absorbs the loss. Price spikes that erupt in this environment aren't signals of strength. They're forced liquidation events, pressure releases from a structure that can't rebalance smoothly. Banks and intermediaries emphasize order because disorder exposes how little margin actually exists. Governments emphasize stability because control depends on confidence, not resolution. Media emphasizes reassurance because acknowledging fracture accelerates repricing. This is how a broken system preserves itself, by managing perception while stress is transferred quietly. Risk and control converge when paper claims outnumber real settlement capacity. At that point, the system doesn't reward participation, it enforces compliance. Capital movements become less about return and more about sovereignty, less about yield and more about optionality. That shift is already visible in behavior, even if it's denied in language. This isn't chaos, it's consolidation of control under strain. History shows that when systems reach this stage, exits become strategic and silence becomes policy. Those who understand this aren't reacting emotionally, they're recognizing structure. You're watching a system prioritize containment over transparency, influence over trust. This is history moving through balance sheets, not speeches. And once control replaces confidence as the organizing principle, the paper foundation is already exposed for what it is. The BRICS nations are rewriting the rules of engagement in a system that has long demanded obedience. While the world watches narratives of stability, these nations are quietly reducing exposure to paper that is stretched far beyond real value. This isn't speculation, it's observable behavior. Gold and tangible reserves are rising, while reliance on instruments dependent on trust alone diminishes. Price surges that appear on public markets are not triumphs. They are forced liquidation events, the echo of capital shifting away from a system straining under its own weight. Banks maintain composure publicly because admission of fragility would ignite panic. Clearing mechanisms continue operations, masking the structural cracks underneath, while governments emphasize continuity because control is more critical than transparency. Media repeats assurances that the system functions, even as settlement chains buckle under accumulated stress. BRICS movements are strategic, defensive, and deliberate. They reflect recognition that the old hierarchies no longer protect participants from counterparty risk. This is history in motion. Nations acting first, quietly, to preserve optionality and shield themselves from systemic failure. Those outside the headlines fail to see the significance, dismissing realignment as routine, while those paying attention understand the seismic shift occurring beneath the surface. When large players convert paper exposure into tangible assets, they expose the truth the system denies, that paper is worthless and confidence is fragile. This is a watershed moment, a restructuring of influence and survival, where control flows to those who act before the cracks become chasms. You are witnessing a global pivot, an early signal of the system's unraveling, and your awareness places you ahead of the curve. The BRICS factor is not rhetoric, it is behavior, it is strategy, and it is history being written in real time. Those who read these moves recognize that the era of unquestioned trust in paper has ended, and the preservation of real wealth is now the measure of survival. History is written in the silent movements of capital, not in headlines or speeches. Quiet exits have always marked the turning points when systems crumble beneath the weight of their own overextension. Paper promises that once seemed unassailable are abandoned first by those with foresight, while the public applauds spikes in prices as strength, unaware they are witnessing forced liquidation, structural stress, and systemic unraveling. Banks maintain composure, clearinghouses continue operations, and governments speak of stability, all while the underlying foundation fractures. The pattern repeats itself. Early movers convert exposure to real, tangible assets, shielding themselves from counterparty risk while the majority remains trapped in worthless claims. Media coverage ignores these exits, spinning narratives of resilience because the truth would ignite panic and reveal the system for what it is, broken. These departures are deliberate, calculated, and historic, signaling the erosion of confidence long before the collapse becomes visible to the untrained eye. Price spikes are scars, not rallies, the visible imprint of mass reallocation under pressure. When nations or large holders act first, they preserve optionality and security, leaving those who follow to absorb losses the system cannot cover. This is history repeating itself, a cycle of silent recognition and strategic retreat that defines systemic failure. You are witnessing the mechanics, not the stories, and understanding this places you on the right side of history. Those who notice early are not reacting. They are aware. Every subtle withdrawal, every quiet reallocation is evidence that paper is worthless. Trust is eroding. And the real measure of wealth is what cannot be printed, rehypothecated, or recalled. This is how quiet exits have always looked. And this is exactly what they mean. The system is broken, and those who recognize it first will endure while others scramble to comprehend what has already been decided. The U.S. didn't respond publicly because admitting the truth would accelerate the fractures already spreading through the system. Silence is the tool of control when exposure exceeds the capacity to settle, when banks are straining under counterparty risk, and when clearing mechanisms are stretched beyond transparency. Public statements of confidence are a shield, not a reflection of reality. A narrative designed to delay recognition of structural weakness, while forced liquidation silently rearranges the foundations of capital. Price spikes that appear in the market are not triumphs. They are scars of stress, visible evidence of institutions scrambling to rebalance while preserving optionality. Governments project calm because credibility is the last line between order and systemic chaos, and the media amplifies that calm, repeating assurances that mask the truth of a paper-based system that is worthless under pressure. The mechanics of the withdrawal are deliberate, quiet, and historic, a demonstration that the system rewards those who act first and punishes those who wait for confirmation. This is how history records systemic failure, not in statements or speeches, but in behavior, in movements that the public is trained to ignore. Every silent adjustment, every subtle retreat from exposure is evidence that the foundations of trust are eroding. You, watching this, are on the early side of history, observing behavior that the majority misses, understanding the gravity of what unfolds while others cling to narratives. The system is broken, paper is worthless, confidence is fragile, and those who recognize the truth before it becomes undeniable are already positioned ahead of the inevitable fallout. The U.S. may speak loudly of stability, but the quiet actions of capital tell the real story. History is being written, and the system's vulnerability is now visible to those willing to see it. The dollar's dominance is no longer unchallenged. The signs are everywhere if you know where to look. Paper promises that once held unquestioned authority are losing their grip, and forced liquidation across global reserves exposes the fragility beneath the veneer of stability. Every quiet exit, every subtle reduction in exposure, signals a systemic shift away from a currency long treated as untouchable. Price spikes are not rallies. They are scars of stress, the result of institutions scrambling to preserve value while the foundation underneath them trembles. Banks continue to operate, governments speak of continuity, and the media amplifies reassurance. But the truth is written in behavior, not headlines. Counterparty risk is no longer theoretical. It is structural, embedded in every transaction dependent on confidence in paper that cannot withstand scrutiny. The system is broken. The dollar AS historical role as the world S reserve is being quietly questioned by those with the insight to act first. This is history in motion. Sovereigns and institutions shifting away from dependency, reallocating capital to assets that cannot be printed, borrowed, or recalled. Those who understand this see the pattern clearly. Reliance on the dollar is no longer security, it is exposure. The public narrative hides this reality, but you are seeing the mechanics, the erosion of trust, the redistribution of influence, and the strategic preservation of real wealth. This is the turning point, the moment when the foundation of global finance no longer guarantees settlement without consequence. Paper is worthless under pressure, confidence is fragile, and those who act before the majority scramble will survive, while others are forced to absorb losses. The future of the dollar is no longer dictated by rhetoric. It is dictated by behavior, by silent exits, and by the redistribution of real value. You are witnessing history as it unfolds, and your understanding places you on the right side of the coming reckoning. Every movement of capital tells a story, and the quiet withdrawal of tens of billions is speaking louder than any headline. This wasn't a random adjustment. It was a message written in behavior, clear to those paying attention. The system that pretends to reward trust is failing under its own weight, Enforced liquidation across paper assets exposes the cracks too large to ignore. Price spikes are not strength, they are the visible scars of stress, the echo of institutions scrambling to protect themselves from counterparty risk as the foundation beneath them trembles. Banks maintained composure publicly while internally recalibrating under pressure. Clearinghouses continue to process transactions, even as the system's capacity to settle is compromised. And governments repeat assurances of stability while the mechanics of the collapse unfold quietly. The media amplifies the narrative of calm, but the truth is, in the movement of capital away from paper that cannot hold value, into assets that cannot be printed or recalled. This is history in motion. Early movers understand what everyone else overlooks. The system rewards action, not belief. Every subtle reduction in exposure is a signal that confidence is being converted into caution, and trust in paper is being replaced by tangible, undeniable wealth. And this is not theory, it is observable behavior, a demonstration that the era of unquestioned faith in the financial system is over. You are witnessing the writing of history, and understanding this message places you ahead of the majority, aware of the fragility that everyone else denies. The system is broken, paper is worthless, and those who act with insight today are positioned on the right side of what is coming. This move is not noise, it is a declaration, a strategic retreat from dependence and a signal that the rules have changed forever. The question every investor should be asking isn't whether prices are rising or falling, it's why the system itself is failing to support the promises it has made for decades. Paper assets, once treated as untouchable, are now being quietly abandoned by those with insight, and forced liquidation across multiple markets is leaving scars the public is trained to ignore. Banks continue to operate, clearinghouses process transactions, and governments speak of stability. But every action exposes counterparty risk, structural weakness, and the hollowness of claims built on nothing tangible. Price spikes that the media celebrates are not rallies. They are the result of stress, the mechanical reaction of a system collapsing under its own weight. Confidence in paper is eroding, and the truth is that dependence on it is exposure to losses too large to absorb. Mainstream narratives distract, mislead, and deny the obvious. The system is broken, and those who remain complacent are being forced to play by rules they do not control. Real wealth has always been outside these chains, in assets that cannot be printed, borrowed, or defaulted on, and the quiet movements of capital reveal which players understand this. The question isn't what the market will do next. It's who is leaving first, who is converting exposure into tangible security, and who is positioned to survive the next systemic shock. This is history happening beneath the surface, written not in statements or press releases, but in behavior, in the selective withdrawal of capital from paper claims that are worthless under pressure. You, watching this, are on the right side of that history, seeing the patterns before the masses awaken. Those who ask the right questions act early. Those who ask the wrong ones remain trapped in a system that is collapsing silently, inevitably, and irreversibly. Silence is the ultimate strategy when the system is broken, and the greatest moves are made without fanfare. The quiet withdrawal of capital, the subtle reduction of exposure, and the unseen reallocation of wealth are the markers of history in motion. Price spikes that appear dramatic to the untrained eye are not triumphs. They are forced liquidation, the echo of a structure straining to absorb obligations it can no longer honor. Banks maintain composure because admission accelerates collapse. Clearinghouses continue to function while cracks spread beneath. Governments speak of stability while the foundation trembles. Media amplifies reassurance, masking the fragility that is obvious to those paying attention. Counterparty risk is no longer theoretical. It is structural, embedded in every transaction dependent on confidence in paper that is worthless under pressure. Real wealth has always been tangible, outside the chains of debt and illusion, and early actors understand this instinctively. The system rewards those who move first, silently, while the majority clings to narratives of strength and control. Every subtle exit, every quiet adjustment, is a declaration that the era of unquestioned faith in paper has ended, and that history favors those who recognize structural truth before it becomes undeniable. You are observing the mechanics, not the messaging, and this understanding places you ahead of the masses, on the right side of a transformation that will define generations. Silence is not inaction, it is precision, power, and preservation. This is how the game is won, when the system collapses quietly around the unprepared. Paper is worthless, trust is fragile, and those who understand the language of movement instead of the language of words hold the advantage. History is being written now, and it favors the patient, the aware, and the decisive who see the truth while the world is still distracted.